Okay, good evening, everyone. Welcome to our MQTraders webinar on the topic Stocks Buoyed by Reopening Initiatives. I'm Robin, the host for today's event, and I am one of the MQTrader team who is the organizer for tonight's webinar. Now, before we go any further, can I just have a quick mic check with everyone? If my mic is loud and clear, please type 1 in the chat box. Okay, thank you for response. Now, Raya is around the corner. Have you guys prepared for it? Especially for our Malay audiences. Have you guys shopped for your new clothes or even decorations? You guys can use the chat box to let me know. So have you guys prepared for Raya, especially our Malay audiences? Okay, I can see that everyone is very excited about this festive season, and this year MQTrade is doing something special, which we have MQ Hari Raya giveaway campaign, and we are giving out 786 MQ points daily and stand a chance to win up to 7,860 MQ points as well. Now you can use the MQ points to redeem attractive rewards, and the campaign is already started on Monday, 80th of April, and will be ending on 2nd of May. Now, if you are interested to know more about our Hari Raya campaign, you can scan the QR code on the screen to learn more about it. Okay, now a brief info about MQTrader to those who are new to us. Now, our full name is Malaysia's Quantitative Trader Group. We use quantitative methods to do analysis, and so we have developed the MQTrader stock analysis tool and made it exclusively free to all our MQ members. Now, how to be an MQTrader member? You can open a trading account through the MQEvents at YH team to enjoy a free subscription to our MQTrader services. Now, the services includes MQETrade, our analysis tool, MQ Point and MQ affiliate program, and many more rewards as well. Now, this is how our latest update, the MQETrade, looks like. With MQETrade, you can easily view up to 10 market depths, MQ trading signal, and other information about each counter at a glance. And also, eTrade allows you to do real-time live data. So if you are interested to know more about MQETrade, do check out the link for more information. Now, this is how the MQTrader stock analysis tool looks like. Right here, we have Hibiscus, a oil and gas counter showing its daily chart. Now, in this system, we have included various trading strategies, and it can compute buy and sell signals based on the strategy that you choose. And on the Hibiscus counter, as you can see right here, the strategy that we chose is EMA5 crossover, and the system can generate buy and sell signals based on the EMA5 crossover. Now, other than the eTrade and analysis tool, as our benefit, you can also use our system to accumulate MQ points every time you do trading. And then you can use the MQ points to redeem rewards at our marketplace and MQdemy. So to start accumulating MQ points, you just need to link your trading account with your MQTrader account. Now, we also have a MQ affiliate program whereby you can get MQ coins just by referring people for account opening and earn MQ coins every time your referrals trade. Now, MQ coins can be redeemed at our marketplace, MQdemy, and even cash out. So if you are interested to know more about our MQ affiliate program, you can scan the QR code right here on the screen. Okay, do you want to get all these rewards with an extra 500 MQ points? Type yes in the comment box. Okay, you just need to open a trading account through the MQEvents at YH team to get an extra 500 MQ points. Now remember to go to the link and submit your contact details. Afterwards, the respective team will guide you on the next step later. Now, those current MQTrader members, you can get a bonus of 300 MQ points as check-in rewards for today's webinar. And there'll be a quiz sent to your email shortly after the webinar ends. All you have to do is upload a screenshot in the post-webinar quiz to claim your rewards. And I'll pause briefly here so that you can take a screenshot right now. And by the end of this webinar, we are giving out mysterious gifts that worth up to 249 ringgit tonight. So do stay tuned if you are interested to find out what is our mysterious gift. And our webinar is live on both Facebook and Zoom. So do share the live stream links with your friends or family so that they can learn together. And we'll be sending out the post-webinar recordings to all who have registered. Now, if you have not done previously and want to get our post-webinar updates, you can scan the QR code to register now. All right, on our topic today, Singapore's Prime Minister, Mr. Hsien has recently announced the easing of pandemic-induced measures, which includes the cross-border restrictions. Now, this is absolutely good news for both Singapore and Malaysia. I believe many of you as an investor, we also want to know how we can position ourselves during this period to get the most out of this reopening theme and what stocks will benefit from this new travel framework. Now, in this webinar, we'll look at its effect on the travel and hospitality sectors and uncover some of the best investment opportunities in the Singapore market. And as for our speaker today, we have Mr. James Ooi, a market strategist at Usmart Securities that has been in the financial industry since 2007. He has Bachelor of Business with double majors in finance and marketing from the University of Technology, Sydney. Now, it is truly an honor to have Mr. James sharing with us today. So are you guys ready for Mr. James sharing today? You can type ready in the chat box and let us know if you are ready. All right, since everyone's ready, now let us invite Mr. James to start sharing with us now, okay? Mr. James, I'll pass the time to you.
Thank you, Robin. Let me share my screen first. Okay. Okay, I hope all of you can see the slide. Okay, hi everyone, good evening to you, and thank you for being here tonight. I appreciate all of you spending your precious night with us. And I seldom do webinar at 8:30, but still good to be here. Good to see you all on screen. My name is James. Like Robin mentioned, I am a market strategist with Usmart Securities, the leading online broking firm. I am in the financial market since 2007, and I'm also a SGS Academy speaker as well. So I normally conduct some training seminar for SGS Academy to Singapore audience and overseas audience. So this is the picture is me actually doing the SGS seminar before the COVID day, and this is me doing some live TV interviews before the COVID days, where you can still go to the studio to film the interview as well. But before COVID day, I was more active, and now I try to be active again. Before we start, probably just want to show you some disclaimer here. Today's presentation is for general education and sharing purpose only and does not constitute to any form of advice to buy or to sell. So past performance is not indicative of future performance. If you wish to obtain some advice, please consult a financial advisor. And with all this disclaimer, we are safe to move on. Okay, so even though I'm trying to talk about stock-specific topic today, right? I think it's always good to actually take a step back and actually look at more macro picture first. So instead of telling you that this Singapore stock is good or this Singapore stock is bad, probably I'd like to share more about how is Singapore stock performing among different asset classes and countries, and then I will talk more about stock itself. So sound good? Okay, so let's move on. So first of all, I would like to show you that the year-to-date performance of different asset classes. So here show you the fixed income performance, equity performance, and the gold performance. So if it means that if you have invested in fixed income like investment grade bonds, right, from since January 1st this year until last Friday, your total return will be negative 9% year to date. And if you have invested in MSCI China, basically your return is negative 15%. S&P 500 also returned negative 7% as well. If only you have bought into gold, your return is positive 7%. And if you invested in KLCI, your return is quite decent at 3%. And if you have invested in Singapore Straits Times Index, which is regarded as the benchmark index for the stock market in Singapore, your return was quite okay at 7% this year. So suffice to say, if you are looking for some risk-off asset, that you are looking for something in the equity space to hide from all this market volatility, other than gold, Singapore indeed is a good choice. So let's move on. You can also see that this is the STI performance relative to the MSCI All Country World Index performance. You can see that the STI massively underperformed the MSCI All Country World Index over the last 10 years. But you can see that since this year, there is some catch-up play here, which means there would be some good upside potential that you probably should spend a little bit more time looking for some Singapore stocks. Let me share with you some of the COVID statistics here. So in terms of share of people fully vaccinated against COVID-19, it is 91% for Singapore, which means that 91% of the Singapore population is vaccinated. China is 86%, Malaysia 79%, US 66%, and the world is about 59% fully vaccinated itself. And in Singapore, we can also see that the daily new cases seems already past the daily peak, the recent peak itself. We can also see that the similar trajectory in the daily new death number as well. IHME also predicts that Singapore already hit its peak in terms of the COVID cases. All this COVID situation now actually make this entire economy reopening and borders reopening possible. So this is why you can find from the news that on March 24th, Singapore Prime Minister, Mr. Lee, actually announced that easing of the COVID-19 restriction itself. This is important because in the COVID period, government provided a lot of subsidy to corporations like SIA, SATS, ComfortDelGro to help them cruise through this COVID period. Now most of the subsidy is gone. But I would like to say that one of the biggest gifts that Singapore government has given to a lot of corporations is this easing of the COVID-19 restriction. So let me quickly go through this easing restrictions. In terms of the workplace requirement, you can see that now 75% employees can actually work at office. Previously, it was 50%. And in terms of the dining measure, previously you can only have 5 people sitting at the table. Now you can have 10 people sitting together. You can also take your mask off when you are outdoor. Okay. Last but not least, Singapore scrapped its VTL between 32 countries. So what does it really mean? It means that Singapore now fully reopens to the world from 1st of April. It means that previously you come to Singapore without needing quarantine if only you go through the VTL lane. But from the start of this month, all fully vaccinated travelers from any country is allowed to enter Singapore quarantine-free. You can come to Singapore by land, by ferry, by flight. You are not needed to be quarantined as long as you are vaccinated. This is why you can start seeing the JB Custom having such a long queue, and people going back to Malaysia, families reunited, and probably a lot more Malaysian are looking forward to working in Singapore once again. This may bring down some labor costs in Singapore, because prior to the pandemic, there are about 400,000 people commuting daily between JB and Singapore. And most of them actually either taking a bus or riding a motorbike. As for myself, right, I do not commute daily between JB and Singapore. I actually stay in Singapore since 2010. So what kind of Singapore stocks will benefit if there are more people coming to Singapore? So one of the first stock that I think will benefit will be the transport company ComfortDelGro. ComfortDelGro is involved in taxi and bus transport business. So from what I understand from Robin themselves is that taxi industry in Malaysia is probably quite fragmented. Or if I were to ask you to tell me what are those taxi operator brands in Malaysia, probably you cannot name any taxi brand in Malaysia. From what I understand, the largest taxi fleet company in Malaysia should be Sunlight Radio Cab. They have about 4,000 taxi drivers in Malaysia. ComfortDelGro, on the other hand, is the biggest taxi operator in Singapore. It controls about 8,900 cabs, 60% of the taxi market share here. But business also being disrupted by Uber, but Uber had exited Singapore. It's no longer here. And it's now disrupted by Grab. But ComfortDelGro also is providing similar private car ride-hailing service as well. So ComfortDelGro is one of the largest land transport companies in the world. It basically has a global fleet of about 40,000 vehicles. Overseas presence include UK, Ireland, Australia, New Zealand, Malaysia, and China. It also owns 75% of SBS Transit, which actually owns 60% of the bus market share in Singapore. And SBS Transit also operates the Northeast Downtown MRT line and some LRT lines in Singapore as well. So this is the revenue and operating profit by different country. You can actually see that ComfortDelGro is actually constantly looking for growth opportunities in overseas market. The 2021 overseas revenue contribution is 46%. 2020 was 45%, and main bulk of the revenue come from Singapore. But overseas business also catching up. Australia bus charter business and China taxi business are catching up. Coach service business in UK also turning profitable recently as well. So, and I also want to show you the revenue breakdown by segment. This may look quite foreign to you, but I want you to only look at two numbers, which are the public transport service and taxi. Public transport service is basically bus and railway. Taxi is taxi. So from 2019 to 2021, you can see that the revenue contributed by public transport service is quite stable, regardless of COVID, staying around 2.5, 2.8 billion. However, you can see that the EBITDA took a hit. We actually halved from 224 to 131, but the biggest hit here is taxi. The taxi revenue was down from 665 to 426 million, is about 30 something percent down. If you look closely, the EBITDA itself was 104 million in 2019, and in 2021 was just 18 million. And EBITDA margin was 16% for taxi, now is 4% for taxi itself. So this is why when you actually hear a lot of analysts talking about ComfortDelGro, right, they're always focusing on the taxi business, because taxi has a bigger recovery trajectory here. I am quite constructive on the taxi business because 75% of the workforce going back to work, some of them actually commute daily by taxi. And in Singapore, I also think that a lot of employers would love to see their employee coming back to office to work rather than having them working from home. And some of them, again, go to office by taxi, go back to home by taxi as well. So, and more people going out on weekends, borders reopening, tourists touring around will need taxi. So a lot of Malaysia cars, if they want to get into Singapore, also need to get BEP. But if you look at what Singapore Land Transport Authority, LTA, actually saying that the processing time for this vehicle entry permit, right, application is about 7 weeks. So Malaysia coming in may not be driving, and then once they are in Singapore, they will definitely going to take public transport or taxi itself. So no one can actually tell you how much this taxi segment will improve. But I would say that this would be the main driver for earning per share and the share prices. And I also know that a lot of investors like to look at dividend itself. Let me quickly go through the dividend analysis here. A few key points here. Prior to COVID, the dividend payout was about 9 cents to 10 cents, and last year it was 4 cents. So there is a good potential of it going up to the pre-pandemic level. Why do I say so? Because previously, I mean, even though company dividend policy is to pay out about 50% of the profit to shareholder, we can actually see that from the historical payout, dividend payout ratio itself, right, is about 75% to 80% pre-pandemic. Now it's 70%. Why the company would like to bring the payout ratio to the pre-pandemic level? Because taxi or bus transportation business is probably a mature business. They are in the mature cycle, and not that would be not a lot of top line revenue growth itself for you to see. So for business in the mature phase itself, right, normally they would like to pay out more dividend, higher dividend, to keep those dividend investors happy enough to stay invested in the company. So post-pandemic, 70% dividend payout ratio. Imagine if they actually can bring this earning per share up, and they also can maintain the same dividend payout of 70% or even push to 75%, right? Your 4-cent dividend could go back to maybe 9, 10 cents post-pandemic. So this is why I think some dividend investors like ComfortDelGro because of the dividend. The dividend yield was about 2.3%. If they can maintain the dividend payout and the earning per share go up, then I would say that you will be looking at double of the dividend yield here. Yeah. However, I would like to say that there would definitely come with overhanging risk for this ComfortDelGro as well. One of the key risks in ComfortDelGro is actually having a lot of competition from Grab itself. So this is why the fleet number have been coming down from 10,000 before COVID. Now it's about 9,000. So meaning to say there are lesser taxi driving around, or lesser taxi driver are renting taxi from ComfortDelGro. So ComfortDelGro is definitely losing some taxi rental income. No one can tell you for sure that when is the bottom or where is the bottom for this declining taxi fleet. But you can actually look at it more positively, because lesser taxi on the road also means that and I also see that there are lesser private cars on the road nowadays as well. So there are lesser taxi serving the same populations. If I can give you some numbers, the vehicle per 1,000 resident was about 12 vehicles per 1,000 resident in 2019, and now it's about 10.9 vehicles in December 2021. So ComfortDelGro was doing about $1.5 at the moment. Pre-pandemic, it was doing about maybe $2 or $2.2 on average. And I think the valuation itself in terms of PE ratio is quite undemanding. So I think this is one of the attractive stock to look out for at the moment. And the second stock will benefit from the borders reopening will be SIA. Because there will be a lot more international visitors traveling in and traveling out of Singapore via airlines, and SIA would benefit itself. SIA stands for Singapore Airline Group. It actually owns Singapore Airlines, Budget Airline Scoot, and SIA Engineering as well. It is the flag carrier airline of Singapore. Is equivalent to our MAS, Malaysia Airlines. Is one of the hardest hit stocks in Singapore due to pandemic. And in terms of revenue itself, right, it was 16 billion in 2019, and 2021 it was just 3.8 billion. Net profit was 682 million, and now is negative 4 billion in 2021. But if you look at the recent earnings announced by Delta Airline in US, it was really not bad. So if US carrier like Delta can actually publish good earnings itself, right? As US is reopening, maybe SIA in Singapore can also publish good earnings in future as well. And the good news here is, if we were to look at International Air Transport Association, IATA, it actually predicted that this year air passenger number will recover to about 83% of 2019 level. Not fully recover, but will recover to 83% of 2019 level. In 2021, it actually the air passenger numbers was 47% of 2019 level. So 47% last year, 83% this year. Next year, it's going to be 94%. And in 2024, it can be fully recovered. So one question you may ask is that, does it mean the share price of SIA will take another 3 years to fully recover to the 2019 price level itself? Because in 2019, it was previously maybe most of the time staying about $6.8, and now it's doing $5.4 itself. Will it take another 3 years? I would say that this is usually not the case, because share price will always try to price in a future event. So it may not take 3 years that long to recover to 2019 level. Secondly, the EPS, earning per share, may also turn profitable faster than expected itself. Yeah. So this is why if earning per share can turn profitable, the share price can actually probably go back before that, because of one thing which is called operating leverage. So what is operating leverage? Operating leverage is how much of each incremental dollar of revenue can a company turn into profit. So imagine this, during this pandemic, a lot of companies are able to cut the costs, such as overhead or labor costs, and they're able to keep the cost cut when the economy recover. So this is why they are able to generate more profit. For example, the revenue for a lot of companies nowadays, right, do not need to fully recover 100% to the pre-pandemic level, but they may be able to only recoup 70% of the 2019 revenue. And 70% is good enough, because they may be able to generate profit already because of the lower cost base relative to 2019. So in this example, if in 2022, the total expenditure is not 6 billion, it's probably 10 billion. You just need the revenue to go back to 10 billion to be profitable again. And how do you And if you going back to 10 billion to be profitable again, right, you basically just need to go back to like maybe 65% of the 2019 level itself. And not to forget, SIA can also raise ticket price to generate more revenue as well. So I would say that you can hear a lot of bears arguments saying that looking at the SIA financial statement, the net loss itself, 2.5 billion, actually, sorry, 4.2 billion, right, actually scare them away. And the revenue is only like 3.8 billion. So it's only like 23% of the 2019 level. I will always like to say to them that you should always look into the operating leverage. SIA doesn't really need to fully recover the revenue to the pre-pandemic level, and yet the company can turn profitable because they have already substantially reduced a lot of overheads and labor costs. So to me, I would say that the investment thesis for SIA is pretty simple. It was the hardest hit because of pandemic. So post-pandemic, it will be one of the key beneficiary company as well. SIA should benefit as long as the travel can fly into Singapore easier. However, there would definitely some headwinds, some risks as well, which include potential re-emergence of COVID that may roll back the entire global economy reopening, geopolitical risks, the escalation of Russia-Ukraine war may actually dampen the travel sentiment, and last but not least, rising oil prices itself. Okay, this is one of the biggest risks to me because SIA, they say that they have already hedged about 40% of the fuel requirement up to first quarter 2023-2024 financial year. And they actually hedge at the average price of $60 per barrel for Brent crude. But again, if you look at the Brent oil nowadays was, I think maybe $110 nowadays. So it looked likely SIA will benefit because of the hedging strategy. But I'm still not so convinced because SIA doesn't always have the best history of the hedging fuel oils, fuel cost strategy. And secondly, if SIA only hedge about 40%, the remaining 60% unhedged portion will also led the company to increase the fuel cost as well because the oil price is still rising. So all in all, I am optimistic in shorter term, but in longer terms, I still don't quite like the airline business model. For example, if you look at Warren Buffett actually sold all his airlines in April 2020. So airline is always a tough business to be in. You park your aircraft there without flying it, you will still need to incur a lot of high maintenance costs itself. So all in all, I think SIA will benefit, but it's not my most preferred culture among the stock lists that I'm introducing today. So one of the stock that I like would be SATS. So SATS is like your Brahim listed on Bursa Malaysia, doing the in-flight catering service. But Brahim is underperforming in terms of share prices in recent years. SATS is a different story. The share price was okay before COVID. A little fun fact here is that SATS actually bought 49% stake of Brahim subsidiary, Brahim Airline Catering Holding Sendian Berhad back in 2015 itself. So technically, if you are flying with MAS, AirAsia or Cathay Pacific Airway at the KLIA, right, the food they serve you could come from Brahim, which in a way come from SATS because SATS has a stake in this catering business itself. So SATS is a Asia leading provider for food solution and gateway services. It provides aviation catering and provide catering to government agency like the Army Food. They serve actually come from SATS, and event catering as well. And in terms of gateway service, it also include air cargo, Security Service. SATS also operates Marina Bay Cruise Central, Singapore. And they also provide the passenger service at Changi Airport. So basically, they will help you to check in and check out at the airport. So why I actually like SATS more than SIA? Because again, airline itself is a low margin business. I think below 10% for SIA. Before pandemic, also below 10%. But SATS net profit margin, right, was double digit pre-pandemic, about I think 13%. And I think in-flight catering service, right, is a better business model itself. So if we look at some of the financial data, we can also see that in the past 9 months, March 2021 to end 2022, the total revenue is approaching 2021 level itself. So it also has some net profit because of the help from government subsidy. And without this government subsidy, they will incur a loss. Nevertheless, it still looks quite promising to me. I think one thing I really like to point out is, if you were to look at the non-travel segment, it is contributing now 43% of the total revenue. So non-travel business is basically non-aviation food solution business, such as central kitchen. So this segment itself probably will have a growth of maybe 8 to 9%. And it's always seemed that, to me, with aviation, the volume coming back, the in-flight food business will pick up as well to actually drive the travel business. And the non-travel business, which is the food business, also blossoming. So I think they are in the right direction at the moment. And one of the company direction is to also diversify its business. So you can actually hear from the newspaper saying that SATS actually expects the non-travel segments, right, to account for 35% of the total revenue by 2025. So this is why you are seeing that SATS is actually setting up the food hub in the Loong Innovation District to be completed by 2024. And the larger plan here is to invest about 1 billion in the next 3 years. It could be for merger and acquisition as well. So all in all, what I like to say is that, all in all, what I really like to say is that SATS is similar to SIA, that will benefit from the reopening of Singapore borders. There will be increase in the flights and passenger coming into Changi Airport, and SATS will be definitely one of the key direct beneficiary. One of the crucial data, if I may, to show you here for you to monitor to see SATS will benefit or not, right, would be the international visitor arrival. So as long as this number go up, SATS should benefit. But probably you do not expect this number actually jump from 67,000 to 1.6 million the next month, because it will take time, because people will definitely need some time to plan their vacations itself. But one of the key events to actually boost this number will be F1, which is going to be held at the end of September to beginning of October. Okay, so this is SATS share price, 4.3, and pre-pandemic it was maybe near to $5 itself. So before I continue, I also like to share that Robin will be doing a mysterious gifts session as well. So he will ask you some questions, and if you got it correctly, you can actually win some prizes from him. Okay, so next I would like to talk about CICT, Capital Land Integrated Commercial Trust itself. And this is the largest and the first REIT listed on Singapore Stock Exchange. It basically owns retail mall and office tower located mainly in Singapore. So it has about 20 properties in Singapore, in Frankfurt, Germany, Sydney itself. Total property value is about 22 billion. Okay, some of the retail mall it owns include Bugis Junction, Clarke Quay, IMM. Integrated mall include Funan, Raffles City, Singapore, Capital Spring. Office include Capital Green, Capital Tower itself. So you may not familiar with all these names, but if you are living in Singapore, right, you will know all these are good names. So this is one of the slide I would like you to take note of, and probably I'd just like to spend some time here because I think it's quite insightful for me. Okay, so I actually got it from CICT presentation site itself. So here show you the tenant sales and the shopper traffic in 2021 relative to 2019 itself. So assuming 2019 is 100%, and we want to look at tenant sales and shopper traffic, whether they recover back to 2019 level itself. And before I continue, right, probably just give you some idea of what is suburban mall here and downtown mall here as well. Okay, so in Singapore, basically suburban mall are HDB mall, mean to say these malls are situated just at MRT station or very near to the MRT station itself. So, and 80% of the Singapore population are staying in HDB in Singapore. So you come to work, you will take an MRT, you will pass by the mall, you go back to home, you will probably you take an MRT, and then you could be passing by the HDB mall, which is the suburban mall as well. So it's quite natural for the shopper traffic or the tenant sales to not drop as much as the downtown mall. Okay, downtown mall will have lesser traffic because they are in city areas, lesser tourists touring around, staying at the hotel in the downtown, and more people working from home. Lesser people come to office to the city area. So this combination of the factors, right, will affect the downtown mall traffic. But now you are seeing borders reopening, more people probably from JBs travel to Singapore, more foreigner flying to Singapore. That would improve the downtown mall traffic itself. So coming back to this slide, I just want to show you that in terms of tenant sales, right, it has recovered to 88% of the 2019 level. If we break it down, we can further see that suburban mall is 96%, downtown mall 77%. So how about shopper traffic? So shopper traffic recovered to about 61% 2019 level itself, and downtown mall and suburban mall is only like 56 to 65% of the 2019 level. You may ask why shopper traffic has not fully recovered, but the tenant sales are better. I would say one of the reasons would be shoppers are becoming more efficient, so they do not want to get exposed to COVID, so they would spend lesser trip to go to shop at the shopping mall, but they probably would like to spend more itself. So this is why you are seeing this kind of numbers here. So two ways to actually look at this quite positively. One, the shopper traffic is still quite low, so it means that it actually leaves a lot of room for improvement. Two, tenant sales already recovered to about 88% of 2019 level, and shopper traffic is only just 61% of the 2019 level. So if shopper traffic can recover to 100% of the 2019 level, and tenant sales could probably become stronger as well. So again, this is up to everyone's imagination now. Okay, so let's move on. And another key point to look at CICT is that CICT only has Grade A office building, and Grade A office rent in Singapore does not drop as much during this pandemic, or you can say that it has been relatively stable. You can see that the drop this time around, right, is not even lower than the previous low. Okay, so I think this is one key things you may look at. CICT, and CICT actually merged the Capital Mall Trust, which is the retail mall, with the commercial mall, the Capital Land Commercial Trust, back in 2020 itself. So and since the merger and since the IPO, basically they are up 36%. Okay, so the last company I'd like to introduce today would be Far East Hospitality Trust. So Far East Hospitality REITs, right, actually owns hotels and residence, service residence itself. They are all in Singapore. This is the only hospitality trust with 100% assets in Singapore. And these are all the hotels and service residence that Far East owns. They are all like mid-tier or upscale. So the story for Far East Hospitality is quite easy. You want to look at the RevPAR growth. So if this number is moving up, basically Far East should benefit. So you can actually see that in terms of hotel segment itself, right? Sorry, the last slide is actually showing you the hotel statistic in terms of RevPAR in Singapore. You can see that it recovered quite strongly since the pandemic. In terms of the Far East itself, the hotel RevPAR last quarter up by 29%. Service resident, it is not an even recovery. It's an uneven recovery itself. Only the 23% growth in revenue per available unit, but it's still recovering slower than the hotel segment. But again, I'm not so concerned. The reason would be, firstly, service residence itself, right, only contribute to about 13% of the total revenue. And secondly, 78% of the revenue contribution is by the corporate segment. So corporate segments, right, are mostly the long-term lease itself. So I would say that the long-term leases are quite stable. So this is why hotel itself, right, are still the main revenue contributor here. And in terms of the so in terms of the hotel revenue, right, you can also see that about 85% come from corporation itself. And in 2021, so this was mainly from the long-term government contracts and companies itself. So again, this portion of the revenues, right, are mostly fixed rent. So suffice to say, at this moment, if we were to look at maybe 2021, how much of the revenue portion come from fixed rent, right? On my rough calculation, is more than 70%, like maybe 75% total rents are fixed, either come from hotel or service residence. Pre-pandemic, back in 2019, it was 58%. Because pre-COVID, right, you have larger portion from leisure that are not fixed itself. So what I'm trying to say here is that Far East has a high fixed rent component that will provide downside protections. And the variables, which are the leisure, because of tourists coming into Singapore. So basically, Far East should be able to continue improving on the RevPAR. So I think this is one of the good recovery play. And furthermore, we also see that recently Far East divest the Central Square. It actually bring down the leverage to 33%. So it actually open room for further future acquisition as well. And remember, the sponsor for Far East Hospitality is Far East Organization Private Limited Group. It is the largest Singapore private property developer. So this is definitely a good sponsor. So this is why if you were to look at the share price itself, right, it's not that far away from 2020 high, because investor, I would say that it's investor like this, so they understand the story about Far East itself. Okay, so lastly, I want to spend a little bit more time on this slide. I want to go through some honorable mention. So what are honorable mentions? Basically, they are stocks that I think will benefit because of the borders reopening on paper, that they are worth mentioning, and hence I want to bring it up to you, to your attentions. But I have yet built strong enough conviction on them relative to the stocks that I actually shared earlier. So the first one would be the restaurants stock. So RENS Holdings is a Japanese restaurant listed company. It is the owner of Yakiniku Go, Ichiban Boshi, Ichiban Sushi brand itself. Basically, they are like the Sushi King in Malaysia. So the food prices are much more affordable. However, the latest half-yearly earnings are not so good. They actually blame on the rising raw material costs. But I think shopping malls are getting more crowded because of the relaxed dining rules itself. So restaurants should benefit. So I want to bring this up to your attentions, and I cannot find any analyst report on this counter. Also, it also saying that since not a lot of analysts are covering it, it's undercovered by analysts and under-owned by a lot of investors itself. And the dividend yield was quite high, 8.8% as well. So it's a penny stock with the share price of 0.193. And next would be Parkway Life REITs. Parkway Life REIT is one of Asia's largest listed healthcare REITs itself. So why healthcare REITs? Because with border reopenings, right, there should be some accelerating growth in terms of medical tourism in Singapore. And Singapore always try to brand themselves as a key destination for the medical tourism. And Parkway Life REITs own some of the world-class hospitals in Singapore. So in terms of the assets, right, they own a lot of nursing homes in Japan. They also own the MOB specialist clinic at Jalan Ambang. It's just next to the Grand Eagle Hospital, Kuala Lumpur. But this Malaysia clinic only contribute to maybe less than 1% of the revenue, so it's negligible. It also owns some hospitals in Singapore, which contribute to, I think, about 60% of the group revenue. So the Singapore portfolio include Mount Elizabeth Hospital, Grand Eagles Hospital, and Parkway East Hospital itself. So all in all, the dividend yield is about maybe 2.88%. It may not sound a lot to you, but in fact, if you were to look at the total return of investing in this REITs, would be 310% for a 10-year period. So meaning to say, if you buy it like 10 years ago, you hold it until today, your total return is about 310% for Parkway Life REIT. Suntec REITs basically owns office building. So Suntec REITs is basically owning some building, retail mall, and convention space. And again, right, it should benefit because more people coming back to office to work. Retail mall also should have more shopper traffic as well. And Suntec City Mall is also in the city area. And the convention center should also benefit because now you can have maximum 1,000 people attending live performance, MICE events, and sporting events as well. So this is one of the, I would say that it's one of the world-class conference center. So the dividend yield is about 4.48%. And I want to probably spend a little bit more time on Genting Singapore. So Genting Singapore flagship project is Resort World Sentosa. So Resort World Sentosa is one of the largest resort in Southeast Asia. So Resort World Sentosa has about couple of hotels, about 6 hotels, a casino, restaurant, and a lot of restaurants and convention centers. And they also own attractions like Universal Studios Singapore, Sea Aquarium as well. So on paper, definitely this should benefit on the economy reopening, borders reopening, but I don't quite like casino business because I don't like the casino business in segment in Genting, Singapore at the moment because Genting, okay, the casino business right actually contribute about 70% of Genting Singapore revenue. And I don't like it. Why do I say so? Because first of all, this Genting Singapore is different from your Genting at Genting Highland. Why is that so? Because usually there are a lot of Malaysia locals at KL can just drive 1 or 2 hours from KL to Genting Highland to gamble. So like I have some friends after work, they just drive up to the mountains, gamble a few hours and drive back down to their home before dawn and start working again. But Singaporeans and Singapore PR will need to pay 150 Sing dollar day entry levy to visit the Genting Singapore casino to gamble. So Singapore PR like me do not go and gamble. And I doubt many Singaporean will be willing to pay the $150 entry fee as well. So in that case, right, can Genting Singapore actually attract a lot of China citizens to come here, or China citizen probably would just prefer to just go to Macau because it's nearer. So who will really visit Genting Singapore? I would say that it's probably those tourists come with family or some business traveler itself. So this is why I don't quite like the gaming segment business model itself. And we can actually see that the gaming revenue shrinking 2017 to 2019 before pandemic, right, from 1.7 to 1.6 billion. And even before the pandemic, I like Genting Singapore because of the non-gaming revenue. The non-gaming revenue was growing before pandemic, contributing to about more than 30% of the total revenue itself, and now contribute to about maybe 22%. So on a side note, if you look at Las Vegas casino revenue, 60% of the revenue come from non-gaming. Genting Singapore is only 22%. So I have some high hope on Genting Singapore if they can actually bring up the non-gaming revenue. And you can also recently see that the company actually announced they will spend about 400 million to upgrade their casino resort theme parks to attract more visitors. They bring it under the Resort World 2.0 program itself. So I am happy as long as they are trying to grow the non-gaming revenue. But you understand I fail to like the gaming business segment. So one last counter I want to bring up to your attention will be Ascott Residence Trust. It's a hospitality trust. But why I do not, even though I like this trust, but I do not actually cover it earlier because it only has about 16% of the asset portfolio in Singapore. Okay, so it's not quite benefit from Singapore border reopening, but the remaining maybe 80 something percent, right, actually come from overseas market. So they basically have hotel all over the world. So particularly Ascott REITs have hotel in Japan, Europe, US, and Australia as well. So this is one of the good global economic recovery, reopening play. So I think it's quite worthwhile for you to take note as well. And on that note, it actually concludes my presentations. And that's all for me. Let me pass the mic back to Robin. Let me also stop sharing here. Thank you.
All right, thank you, Mr. James, for the insightful session. Now, to all our viewers, thank you for staying through the session. Now, a gentle reminder, if you have any questions, please feel free to type them out in the chat box as we will have our Q&A session very soon. Now, to know more about trading in Singapore, you may scan this QR code to visit this link for more information. You can also join the SGX Invest Telegram channel to get the latest market insights in Singapore. Now, all you have to do is just search for SGX Invest in the Telegram app or scan the QR code here for more information. Now, a quick reminder, if you want to open a trading account with the MQeTrade at YH team, you can do so by scanning the QR code or by sending us your contact details privately through the chat box. Now, those who sign up today will also get an extra 500 MQ points when your trading account is opened successfully. Now, for current MQTrader members, remember to do the post-webinar quiz and submit a screenshot inside to claim your 300 MQ points as your check-in rewards. Now, if you haven't registered for this webinar and want to get our post-webinar updates, you can register now by scanning the QR code right here on the screen. And most importantly, we will be giving out our mysterious gift that worth up to 249 ringgit right after the Q&A session. So do make sure that you stay until the end to participate with our mysterious gift session. Okay, so we'll start our Q&A session now. So as the first question, a moment. Okay, do you think when borders reopen, people will choose retaliatory consumption or save money for the coming inflation?
Sorry, can you repeat that?
Okay, do you think that when borders reopens, people will choose retaliatory consumption or save money for the coming inflation?
Okay, I think you mean revenge spending, right? I think they will spend more because I think if there are tourists entering Singapore, you come to a foreign country, you might want to spend more. And I think the underlying reason for me that people will tend to spend more nowadays also the increase in wages as well. So you are paying more now, and so you have more spending power, especially now it's an employee market, not the employer market. So there are a lot of job vacancy. So borders reopen, I think they will spend more. And if we were to look at the household wealth in US, they are also increasing as well. So I also assume the household wealth around the world generally increase. And at least this is what I see from the household saving rate. People also save more. And I think because of border reopening now, they would like to spend more. I think as for Singaporean living in Singapore, with or without borders reopening or with or without the inflations, Singaporean may want to spend more because if you were to look at the latest Singapore budget, they actually announced that the GST will increase from 7% to 8% starting next year. And then next year, which is in 2024, they will increase from 8% to 9% again. So I think because you do not want to incur the extra like 1% GST next year, right? You will see that they will try to stop piling near the end of the year itself. So this is why I see that they will try to spend more.
Okay, thank you for clearing the air. So moving on to our next question will be, other than the tourism and hospitality sectors, are there any sectors that we can look with the borders reopening?
That's a good question. I think other than the transportations, hospitality, or the sector or restaurant that I mentioned, right? I think the secondary impact would be the banking sectors. So why I say banking sectors, because banks are economic sensitive. If border reopenings, economy should do well. So this is why I am constructive on banks. Net interest margin should improve you should also see loan growth as well. So I always like the banking sector here in Singapore. Singapore banks here are a bit more easier to understand. There are only 3 Singapore banks listed on SGS, which are DBS, OCBC, and UOB. They combined contributed to about 46% of Singapore Straits Times Index STI weightage. So they are quite important on an index level as well. So, or you can say that there are a lot of active funds when they buy into Singapore stocks. Banking stocks are normally the one that they will have the highest weightage relative to the remaining sectors itself. Yeah, back to you, Robin.
Okay, so the banking sector is what we should focus other than the tourism and hospitality sector.
Yeah, probably let me put it this way. I think if you have not invested in Singapore stock before, and then if you would like to take a look at Singapore stocks, right, banking sector should be the one that you probably want to look at. The first stock you should look at first before venturing to others to understand others. Yeah.
Okay, I see. So, all right, for the last question. So, do you think it's possible for tourism and hospitality industry to rebound to pre-pandemic level? If yes, how long do you think it would take to get to that level?
Sorry, I when you say level, right, you are saying the revenue, if I understand that correctly. Yeah, or the numbers itself lah. Yeah, okay. I think how long will it take to go back to the level itself? I really don't know. I think probably going back to one of the slides is that if you were to look at the IATA, the International Air Transport Association data itself, right? I actually mentioned this earlier in the slides that they predicted by 2024 will fully recover in terms of the tourism industry. I mean in terms of the international visitor itself will fully recover to the 2019 level. But again, I would say that if you are talking about how soon the share prices could actually rebound to the pre-pandemic level, then I would say that share price are always try to price in future event half year or 1 year earlier. So share price may actually recover sooner than the full recovery in terms of the tourism or in hospitality itself. And I also mentioned about operating leverage. So this is why I do not think you really need to see the revenue to fully recover in order to see the share price go back to the same level as of 2019. Yeah, that's for me.
Okay, now thank you, Mr. James, for the informative session. And I believe all our viewers have learned a lot today. So for those who are interested in opening a trading account with the MQETs YH team, remember to send your contact details via the QR code or the chat box, and the respective team member will guide you on the next step. Now, remember that you still can register for the webinar. If you want to get our post-webinar updates, you just need to scan the QR code here to register. And after the webinar ends, remember to do the post-webinar quiz and upload a screenshot into the quiz to claim your check-in rewards. Now, once again, thank you, Mr. James, for sharing with us today. And to all our viewers, we'll be starting our mystery gift session now. So we are giving out gifts worth up to 249 ringgit. So before that, let me briefly explain how you can get our mystery gifts today. So there will be question and answer options will be shown on the screen, and you can answer them by typing out A, B, C, or D. There are 5 questions in total, and for each question, the first 2 persons from Zoom and the first person from Facebook to type out the correct answer will win the mystery gifts. Now, if you won before, we will pass the chance to the next person so everyone gets a chance. And for winners, remember to send us your contact details, for example, your name, mobile number, or email address via the private chat function on Zoom and Facebook so that we can arrange them to send the gifts to you. Now, if you guys are ready, now let's get started for our mysterious gift session. So here comes the first question. How many MQ points will you get if you open a trading account with MQT's LYH team? Okay, that's a lot of answer. Okay, the correct answer is C. So let me see who's the first two from Zoom. Now remember that if you have chosen as our first two winner, remember to send us your name, mobile number, and email address via the private chat function on Zoom or Facebook so that we can arrange to send you the gifts. Just a moment. Okay, for Zoom, the first two winners is Tay888 and Jared. Now once again, remember, send us your name, mobile number, and email address. Whereas for Facebook will be the Facebook winner will be Xiuman Liu. Now remember, send us your contact details, name, and email address. And so we'll be moving on for our next question. Okay, what can you do with MQ points? Now, yes, the correct answer is A. Redeem at MQ Marketplace and MQdemy. So for the first two winners of Zoom will be. Okay, thank you, Tay. We have received your information. Okay, for the second question, the first two winner is just a moment. Is Yuk Long Liu and Chun Hong for Zoom. Yuk Long Liu and Chun Hong. So remember to provide us your details, your name, contact number, and email address. Now, whereas for Facebook will be Eunice Lim. Okay, so that's all for the second question. We'll be moving on to the third question. When did Malaysia and Singapore border reopen? Okay, that's very fast. Yes, the correct answer is 1st April 2022. Okay, the first two winners of Zoom is... Okay, the winner for Facebook is Ainet. Whereas for Zoom is Melvin Hung and Claire. Congratulations. Remember to send us your details inside the private chat so that we can arrange the gift to you. Okay, the fourth question. According to Mr. James, which two sectors will benefit the most from the reopening border? Okay, I think this one is a more difficult one. All right, the correct answer is B, travel and hospitality sectors. So the first two winners from Zoom is Kelvin Kaur and Sean. Kelvin Kaur and Sean, remember to send us your contact details so that you can get the mysterious gifts. And whereas for Facebook will be Victor Aoyong. Okay, so moving on to the last question for our mysterious gift tonight. Which stock was mentioned in Mr. James' sharing? Is it A, SIA, B, Frontcan, C, Sheng Siong, or D, Mapletree Industrial Trust? Okay, let us review the answer. The answer is A, SIA. So the winner for our Zoom is... Okay, Mr. Cole, we have received your details. Okay, for the winner of last question is Mohammad Shah Rezan and Wing Leong for our Zoom. And whereas Facebook will be Ko Wen Shi. Now, for winners who have not yet sent contact details to us, remember to do so now. You just need to send us your name, mobile number, and email address for us to contact you on the gifts arrangement. Okay, so while waiting for them to send their details, you are more than welcome to send us your inquiries regarding MQTrader in the chat box, and I'm more than happy to help you. And also just a quick sharing again is that we will have our Hari Raya campaign started on Monday until 2nd of May, which we are giving out 786 MQ points daily. So if you are interested to know how you can get the MQ points, remember that the links are in the description, or you can follow our MQTrader Facebook or Instagram for the latest updates and on how to get the MQ points, the 786 MQ points. Now, actually, the steps are very simple. You can just view our Facebook story or Instagram story, and you can identify there will be a 4-number gold color digit. There will be our MQ Raya code. So make sure to take down that code and go to our event website to key in, and you'll be entitled to get our 786 MQ coins. Now, once again, MQTrader will be organizing webinars at least once every month this year. So remember to like and follow us on our Facebook and Instagram so that you won't miss any of our updates. And right here, the screen is showing our MQ points feature, whereby every successful trade, you can earn MQ points to accumulate, and then you can redeem rewards at our MQ Marketplace or MQdemy. Okay, I will actually share again our MQ Raya event slides. Just a moment. Okay, now this is our MQ Hari Raya giveaway campaign, whereby you can get up to 786 MQ points daily and up to 14 days. Now, all you have to do is visit our website, on the i3 Investor or our MQTrader Facebook or even our Instagram. For Facebook and Instagram, you can simply watch our story to identify the MQ Raya code. Afterwards, you can go to our website to key in the code, and then you'll be entitled for the 786 MQ points. Now, just a gentle reminder that only 10 redemptions are available daily, so you better be quick. And if you did not get it today, it's okay. The code refreshes every day at 12 a.m. You can stay tuned for our Facebook as we will have the new code available every day at 12 a.m. Now, if there are no further inquiries, we'll end the webinar today. I'll turn off my camera and the webinar will still be live for a few more minutes so that you can refer to any of the links inside the chat box before it's gone. And that's all. I wish you all have a fruitful week ahead. Stay safe and thank you, everybody.
Thanks for watching.